Good morning, everyone. Thank you for joining us this Saturday morning, and welcome to this educational presentation titled, Has the Market Bottomed? Well, today I'm going to share with you a tool that we have readily available on our PTS Primo Charting Platform that can really help you decide not only if something is bottomed, but if something is topping out as well. Now, it's not designed to be 100% correct, but it's a great tool to have in your trading toolbox to help you make these decisions. Many times traders are stuck in a position where it's actually going in your favor, or maybe you want to decide whether you should be exiting or staying in. This is a great tool to help you. Now, for example, let's look at what was reported just a week or so ago where the Dow surged more than 2,100 points. This was the biggest gain the Dow had seen since 1933, all right? We're talking 90 or so years ago. The Dow had its best day on the 24th of March since 1933, clawing back some of its brutal losses on signs that Congress was nearing a deal for a U.S. stimulus package worth about as much as $2 trillion to battle the coronavirus pandemic. So this was really great news that the country was using something to stimulate the economy to get it going. So as we look at a chart here, this is that big day that the Congress signed the deal, and this is the day that the market was up 2,100 points. I know it doesn't look like a lot here, but as we see, the market was really falling out of bed. Here's the beauty of this tool that we have on our platform. It actually signaled well in advance right here, these last 4 or 5 days, that the market was getting close to a bottom. So it was generating an early warning in advance of that stimulus. So let's say you were lucky enough to have some puts or be short the market. Well, you would have known well in advance after this downturn had happened that we were getting close to an end here prior to that 2,100 plus day. All right. Let's say that you were thinking about going long, or not only just covering shorts, but thinking about going long. You would have had this early warning right here in advance. And once again, this tool, although I'm not telling you that it's going to be 100% correct, it works all the time. This tool, though, that you can use in your trading is readily available on our platform, the PTS Primo Charting Platform. I developed this tool with ProTrader strategies to help you learn how to trade and to teach you how to trade simply by applying it. And today, I'm going to go into detail and show you exactly how to apply it to your own trading. So welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. 10 years ago, I teamed up with ProTrader Strategies with one goal in mind, and that was simply to educate you as traders. We feel the main thing that is missing with most traders is simply education. And someone would say, well, Steve, I've been studying. I took that course. I took that $10,000 online course, and I bought that system that tells me where to buy or sell. But if you look at it, that's not really education, because I would just say about 90% of all these things that we think are educating us are really taking us out of the game, and they're not calling for anything to educate us. They're just simply telling us how to blindly follow their system. Education really means that you no longer have to rely on anyone or anything else to generate signals for you, because you understand how to make your own decisions. So I've been trading for 43 years now, and the reason why we formulated specialist trading was so that we could share with you all the things I've accumulated in my 4 decades plus of trading, things that have worked and shown consistency over time, so that ultimately you would be able to make your own trading decisions. That, in my opinion, is the only, and I repeat, only way a trader can become consistent. Not by blindly following someone else, but by making your own trading decisions. So this is the service we provide, sharing that education with all of you, our students around the world in over 115 countries and in every state in the United States, so that ultimately they can free themselves of having to rely on someone or something else and make their own trading decisions and be in charge of their own trading destiny for the very first time. So you'll see the attention to detail we share with you in today's class. But before we begin, once again, as always, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this tool that we have on our platform. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples you're going to be seeing today are strictly for educational purposes only. Now, if you haven't done so already, please feel free to follow us on Twitter. I post different information on a daily basis, anywhere from little bits of financial wisdom to signals that our strategies have currently generated. I go into detail explaining what the strategy is based on. Is it a continuation method, a pullback method? And so there's lots of great free information on Twitter please feel free to follow us there. There's our handle right there. You may want to copy that down. Now remember, our only goal as a mentor, as an educator, is simply to provide you with education that has stood the test of time. Unfortunately, our entire industry is based upon the opposite. I mean, think of it. You are assigned to go to a chat room after you take a course. You are buying some 10,000 course, once again, that automatically spits out buy and sell signals. Or you're told to go to TV and listen to the pundits talk, and they know exactly what to buy or sell. I mean, this is a recipe for disaster. I did this 4 decades ago, and I thought it was supposed to work for me then, and it didn't work then. So don't think for a second that things are miraculously going to change and all those things are going to start working. There's no consistency in following someone or something else. The only consistency you will see or receive, I should say, is when you make your own decisions. Because the reason is because you are trading according to your own means. In other words, if you follow someone who likes to trade 100 times a day and you only like to trade once a day, even if that system or methodology generates profits, you will most likely lose because it's out of your realm. You don't feel comfortable. So this is what we mean. You should never blindly follow someone. Our goal is to simply educate you so that you can basically make your own decisions. So with that stated, let's begin today's presentation. And here's what we're going to be talking about. What my mentors first taught me, because this is one of the first things my mentor said to me, and I want to share it with you. They said, Steve, the market, not some guy on TV, not a chat room, not some institution, not some system, but the market is always telling you what it wants to do. So therefore, your only job as a trader is simply to listen to the market to find out what it wants to do. Does it want to go up? Does it want to go down? Does it want to go sideways? And then once you have deciphered what it wants to do, just simply jump on board. That's it. Trading is no more complicated than that. There's no reason to overcomplicate your trading by looking at fundamental news, waiting for earnings, looking at jobless claims. I mean, I stopped looking at those things 43 years ago, okay? So if I'm still here, there must be a reason why they really don't work. Now, obviously, if you want to continue to track those things, you can, but there's absolutely no reason to. There really isn't, all right? These are all just things that really, they're only serve to make your trading more complicated than it has to be. And then one would say, well, then why we've been taught these things? So it's because no one has really ever taught you to listen to the market. So that's what our goal is, trying to make things simple. And someone would say, well, Steve, I'm not a technician. I don't follow all these indicators and stuff. So, it's not my nature to listen to the market. Well, listening is a lot more easier, in my opinion. It's a lot more easier than trying to figure out if the earnings are positive or negative, all right? That's just, basically, it's just like throwing a dart. I mean, how many times have you thought that earnings reports come out and they're great and the stock goes down? Or the exact opposite? Or maybe you've seen some terrible news, some worldly conditions, and the market goes up, okay? So those things are very deceptive. They're very hard because they're too subjective. They're too subjective for people to find out. What we want is something cut and dry. And when you listen to the market, I would say the majority of the time, 90.9% of the time, it's cut and dry. It's very easy to figure out. So the way we're going to do that in today's educational presentation is by using our new custom crosshair. This is a new tool I developed with ProPrietary Strategies, and it can really help you when finding out if there is still strength either to the upside or to the downside of a strong trending market. All right, so let me first share with you what standard crosshairs look like. Just about every platform has crosshairs. All right, they're usually used just as a price identifying tool to give you an identification of where things are. And this is what standard crosshairs look like. All right, so we've taken it up a notch and had a new way to look at, and this is what we call our custom crosshairs. We're going to have the standard vertical and horizontal lines, but we've also added a top diagonal line and a bottom diagonal line. All right, the top one is red, the bottom one is green. So this is going to help us find out if there's still strength left in a trend, either a very strong uptrend or, as what we've seen lately, in a very strong downtrend. This is helping us see this through using this along with these technical requirements here, technique requirements. So in order to use this, you're going to need the buy-sell line, which is simply the 50-period simple moving average. And we'll show you exactly how to apply this, all right? On our platform, all you do is click on the buy-sell line. The drop-down menu appears. What you want to do is just use the simplest form, which is the 50-period moving average. We have 3 other different ways in which to view it. The buy-sell line, the simplest, the easiest way is just the 50-period moving average, all right? And you'll see this line appear, all right? Now, next thing you want to do is use obviously the custom crosshair, which you'll only find on our new PTS Primo Charting Platform. Now, most people will use the custom crosshair and place it over the price. But what we want to do is something different. What we're first looking for after we add the 50-period moving average is a strong upward slope, and we want to see price move as far away from that, either as far away up or as far away down, because this is what we're using this tool for. We're using it to see if we're running out of steam to the upside or running out of steam to the downside. So when we click this on our platform, you'll go up to the icon here. Here's our custom crosshair icon. And this is what it looks like. Now, normally you would place a crosshair over the price. What's going to be different here is you place it right on top of the 50-period moving average. So when price makes a new closing high or it's making new highs, what you want to do is place it right here. And this is how we're going to determine how something is running out of gas to the upside or running out of gas to the downside, okay? So let's look and see how we apply this process on our platform. I'm going to show you some older slides. It doesn't make any difference because these are older slides basically just to show and in detail the process and to teach you how it works. Then I'm going to do something which I really rarely do in my Saturday courses. I'm going to go to live charts or charts that were updated up until yesterday. And we're going to look at some current examples of stocks. Okay, we're only going to be concentrating on stocks today because of the stock market and the way it's been so volatile as of late. But you can use this tool on futures, on currency pairs, Bitcoin, commodities. It makes no difference. But we're just going to be focusing on stocks today, okay? And then if you're interested in a particular stock, we have a limited time here today, but just, go to the question and answer box, type it in, and maybe we can punch it up and take a look at it, all right? All right, so first of all, let's look at these technique examples. I'll explain the process, and then we'll go on and look at the live charts. Once again, these are older charts. Here's an older chart of Netflix. Let's say you were lucky enough to buy Netflix down here, okay, on this little consolidation area. And now you've got a really good profit. Maybe you sold a portion of your position right here, and you're wondering, boy, how long is this thing going to go straight up? I don't want to, hold on to it too long because then we all know things like this happen. All right, so here's how the custom crosshair can help you. What you want to do is click it on, and instead of placing the crosshair over the price, what you want to do is when a high has been made, place the crosshair right on top of the 50-period moving average that corresponds with that high or that closing area, all right? And this is how you read it. You see the 50 moving average, the blue 50-period moving average. If price is overbought, most of the time that moving average will be well below the lower diagonal. So in other words, it will be running out of steam if you see this blue line well below, or at least some distance below the lower diagonal line. Now you see here, it's kind of hugging it, but it's not below. So this is telling us that there's still room to the upside, which obviously happened, okay? So basically we're saying, well, there's some more room to the upside. It hasn't run out of steam yet. Most likely you're going to go higher. So actually it did, as you can see here. It had a little pause here and then went higher. So as it goes and makes new closing highs, as we did right here, once again, you just find the corresponding bar and lower the custom crosshair down to the 50-period moving average. Now look where the 50-period moving average is. It's well below the lower diagonal line. So this is a very strong warning telling you that it's running out of steam. Now, is it 100% foolproof? No. Many times you'll see just as this happened. We had a sell-off for a couple of weeks, and then it went back up and closed higher. All right? So this is what will happen every once in a while, but many times what you may want to do is just say, okay, well, maybe I'll take some profits here. Maybe I'll sell another portion of my position and wait and see where the dust settles. So as you can see here, we sold off, we had a nice sell-off, and then we had new closing highs. So you want to do the same process. Once we have new closing highs, move it there, and look what happened. The 50-period moving average is still below. So at this point, it's telling you still that most likely this was just a retracement. It's just, flirting with those old highs, and most likely we're going to sell off again. And then look what happened in the near future. Now, all the profits you had were totally wiped out. So this is where this tool really comes in handy. It's a great tool to have in your arsenal, in your toolbox, to help you decide if maybe you want to exit all your positions, maybe some of them. I'll show you in just a few seconds how you can use this as a tracker too. Let's look at another older chart example for educational purposes in PSA. Once again, let's say we were lucky to get long around here. As we made these new closing highs, we placed the custom crosshair right on the 50 period. And you can see once again, it's hugging that lower line, but it doesn't really go below it. The further away, the stronger the warning that this is topping out. And so look what happened. And someone would say, well, Steve, it didn't work very well because it didn't give me a warning, but look what happened. It still sold off. Well, see, when this happens, this actually is not, some type of flaw. This is actually a opportunity to go long, because since the indicator wasn't giving you any indication that it was, topping out, well, perhaps this is a buying opportunity. And if you wanted to pick up more shares, if you wanted to buy more, this is where you would have been buying, because look what happened. Weeks later, we're making new highs. So as we make those new highs, let's check again. And once again, we're still not below that lower diagonal. And we sell off here a little, but you could have had another buying opportunity. Now we continue to make new highs. So as we do that, let's see what's happening here. The 50-period moving average is now well below. So this is what you can do now. If you had taken the opportunity to buy more here or here, you could sell a portion of your position. You could sell all of it. It's up to you. But basically, what this is telling you is not that you have reached the top, that this is the high. It's basically telling you we're running out of steam. Doesn't mean it's going to end today or tomorrow. It just means that we are now in an area where we're just basically running on fumes. So be very careful. This is just a warning device. So here's one way a lot of students like to use this. What they'll do is, once that bar closes and the next bar closes, they'll place a stop. Be low, just one tick, maybe 1 point. It's up to you below each preceding bar until ultimately you get stopped out, as you would have right here. Okay, so you would have been out. Now here's where a lot of students say, well, Steve, I got out and then we continue to go higher. That's okay, because you went higher for 3 or 4 days. But what if you looked at it a week or a month in advance? Wouldn't you have been glad that you got out here? Okay, sure, you didn't get out at the top, but I don't know of any technique that guarantees you're going to get into the bottom and out at the top. So looking in hindsight, aren't you glad that you at least got out here? Maybe you didn't get the top, but looking in hindsight, that was a great place to exit. Also, once again, as we see, we made that new high. Look how far the 50 was below the lower diagonal. Now, obviously, if we're looking at bottoms, we want to see the 50 above the higher diagonal, and I'll show you a lot of those examples once we go to the real charts. All right, last example here, BIIB, before we go to the real charts. Once again, let's say you were lucky enough to get long. If you looked at this high, you see that the 50 was still above that lower diagonal, so you're still okay. This could have been a buying opportunity. You said, well, Steve, why did it sell off if this didn't give me a warning? Well, maybe it was giving you a buy opportunity, saying that even though we have a sell-off, you may want to look at this as an opportunity to pick up some more shares. Because look what happened a month later. New highs were being made. So as we go up to this new high, now we start to see that there is some movement below the lower diagonal. So that's an early warning. You could have exited everything or use that tracker technique we told about, placing your stop below. So you would have been exiting roughly around here. Here's once again where students say, gosh, Steve, but it went up higher. 2 weeks later, it was making a closing high, a new closing high. Well, yes, but if you placed the new custom crosshair, you would have seen that you were still being warned to get out. And looking back in hindsight, aren't you glad that you exited here instead of holding on to the position and it's now in the loss column? Okay, so that's basically the format. I'm going to go on to our live charts now to show you how this actually works. You could have used it this last couple of weeks. But remember, as you look at our disclaimer, please remember that all examples I'm going to be sharing with you are strictly for educational purposes only, okay? And also, these are for educational purposes, but if you have a stock you're interested in me checking out, please type it into the question and answer page. And if we have time, I'll go over them as well. All right, so as I transfer over onto real charts, here's our platform, and we're looking at the spiders. This is the chart I shared with you earlier at the opening of the presentation, okay? Now, how could we have applied this, and how would this have helped us? Well, here's the process. Remember, the first thing you do is go to the buy-sell line. Click on the feature, and just simply click on 50-period moving average. Here is the 50-period moving average, all right, the buy-sell line. Now, what we want to do is look for any stock or any issue. And remember, once again, it could be an intraday currency pair. Could it be a 5-minute E-mini chart? Sure, it could. Could it be a monthly chart of Bitcoin? Sure. It makes no difference if it's commodities, stocks, futures. But what you're looking for is something price level that is really stretched either far above or far below that 50-period moving average, because this is going to give us the sign that it's running out of gas in whatever strong direction it's going in. All right, so what we want to do now is go up to our custom crosshair right here, click on the icon, and here we have it. All right, you see how we have the top red line and the bottom green line. All right, so here's how we're going to use it. Let's say right here, when the market was really starting to go down, we thought, boy, this is really oversold. Let's say you were lucky enough to have puts. How do you know where to get out? Is this going to go down another 5,000 points, or is it getting ready to bottom and bounce? What you would do is, once we made this low right here, just find the corresponding bar and go up to the 50-period moving average. And right here, we're starting to get a little of a warning. Do you see how the blue line, the 50-period, is above the red top diagonal? So this was a market giving you a warning that we're getting close to some type of bottom, or at least some type of bounce, because we're running out of steam. It doesn't guarantee that the market has bottomed out, but it's just telling you on the short term, we may be running out of steam. So if you wanted to, let's say you were short or thinking about getting long, you could have placed a stop with each preceding bar here to buy above, okay? Let's go to this bar right here. We made another closing low. We go up to the corresponding area, and once again, look how far we're starting to get further away from that top diagonal. You see how this works? So now it's still telling us that, yes, this is running out of steam. If you're short, you may want to cover half your position, or you may want to move your stop down even lower to protect your profits. You don't want to get caught up with a market moving up 2,100 points in one day. And let's go to the next day, which made an even lower close, and we're still showing that. It's moving further away. And then look what happened after that. That's when we started to have this nice bounce. Now, as we're going higher, let's just take Friday's close and see, even though it didn't make a new closing low here, let's just see how the relationship is. This is the spiders now, the ETF that represents the S&P 500. So we are still basically hugging, but we are still showing that the 50-period moving average is above. So this may be telling us that maybe there's a rally in store, maybe there's not, but I would still be very careful at determining, thinking that this thing's, the market's going to fall straight out of bed. And even if it does, you still want to use this tracker. But the custom crosshair is still telling us that we are still a little bit running out of steam to the downside. Even though we went down the last 3 or 4 days here, we may be getting very close to having another bounce again. This is just an early warning. This is not a system. It's not a signal, but a way to track and see if strength is still in the market. We're not recommending you do anything. We're just sharing knowledge with you. Let's look at the other side of the coin here. Once again, we looked at things that were bottoming out. Let's look at TDOC. Okay, as we can see here, this is a current chart. As we made this high right here, which was in 23rd of March, if we move our custom crosshair down to the 50, where is the 50-period moving average? It is below. So even though we had 1 day sell-off the very next day on the 24th, we've come right back up. We pretty much held our ground. But if we go to current moves right here, we see that we are hugging, at the beginning, we're still hugging the 50-period moving average, but further later on, we are well below. So this is an early warning with TDOC telling us that perhaps, we're not recommending, but perhaps this is running out of steam to the upside still. This may be falling out of bed, may not be, but it's something to know. If you're long this stock, or if you're thinking about buying it, this is a great tool to determine whether you want to buy. So many times people buy at the top. I'm sure we've all done that, right? You buy at the top or you sell at the bottom. Well, what if you had this tool? And you said, well, boy, maybe I better not buy here because it's telling me that it's running out of steam to the upside. Maybe I'll wait for it to sell off before I buy, okay? It's a great tool to have. Let's look at another indication. Let's look at ROST, okay? Now this is well below once again. Let's start tracking right here when it had this big gap down, all right? So we go straight up to the 50-period moving average. And look what the tool was telling us. Even on that strong gap down day and it closed near the low, it really wasn't telling us that much, that strongly, that this was running out of steam to the downside. It was telling us that there was still room for it to go lower if it wanted to. So let's go to the very low, which was 2 days later, and let's see how it looked, okay? Now we're getting a warning that the 50-period moving average is above the high diagonal. So now, Look at the warning we had on the 18th of March that we may be running out of steam to the downside. If you're short, this would be a good place to take some profits, maybe half your position. Or if you're thinking about going short, don't want to do it right here. It's a little bit too late, all right? It's running out of steam to the downside because the 50 period is above the highest diagonal, all right? You all see how that works. And then right after that happened, we had this nice bounce, okay? Let's look at Zoom. This has been in the consciousness of traders for this last week or two because it's been going straight up and everyone's excited that everyone's going to be using this technology now because of staying at home. So as we see here, when we made these new highs, which was on the 20th or 23rd once again, all we do is come down here to see if this is going higher. A lot of people bought here, as you can tell, because they were thinking, boy, this thing is going to really make a lot of money. This could be a $300 stock. And maybe it will be. But for the short term, let's see if it's running out of steam. As we go all the way down to the bottom here, what is the custom crosshair telling us? Telling us that most likely this is running out of steam, that we should be very careful and wait for a little sell-off before we think about buying. Okay, now obviously if you're investing, if you're not trading, if you're investing for 10, 20 years, you don't need to look at this on a daily bar chart. Maybe you look at it on a monthly or a weekly. And these little sell-offs or short-term bounces or sell-offs really don't matter in a long, decade scheme of things. But if you're trying to time the market on daily bars or even intraday bars or weekly bars, this is a great tool to have. So as you can see, it was giving us a warning, do not buy here at 160, and the stock now is trading roughly 40 points lower, all right? So at this point, we will tell, if we should buy it, it's up to us, but aren't you glad that you didn't jump in and buy this here? Okay, maybe you're interested more likely in buying it around these levels. Let's look at CMG. Okay, this stock had a tremendous sell-off, and it looks as if it may have stopped, or maybe it's going to come all the way down lower. As we look at this day here on the 17th of March, where it had a strong downward day, we move the custom crosshair up, and it's given us a little warning. You see how the blue line is above the top red diagonal? Well, that's giving you a little fair warning that we are probably running out of steam, but not enough to really take a strong action. Maybe you want to move your stop down. If you're short, maybe you may not want to sell anything, or just wait a couple of days. But as we see on the very next day, we made even a lower close. All right, so let's move the custom crosshair up to that corresponding day, and it's still giving us a warning. See that? And now the 50 period is well above. So that's a very strong warning that we should not be shorting this, that we may want to cover all our positions. And look what happened. The stock went up from 450 up 250 points. You see what a great timing tool this is, how you can tell if something is running out of gas. Now, one more I wanted to look at was the airlines, because the airlines have really fallen out of bed in the current crisis. Let's look at United Airlines, okay? This is a very interesting chart because right here on the 12th of March, as you can see, we had a huge gap down and we closed near the low. Now, most people would think this is an exhaustion gap. This is a technical term meaning that at this point, this is probably the bottom because this is where everyone is getting out. It gaps down and it closes near the low. So this is basically just fear and panic setting in. And this is where you should be buying, okay? Well, as we move the custom crosshair up, let's go up to these levels and see if it's given us a fair enough warning. Well, it was above, but not really tremendously strong. This was something that was giving you a warning, but not telling you that the bottom was in yet. You could have maybe covered half your position, or as we said, track it, place a stop here all the way down. As we made this closing low a week later, let's see where the 50 period moving averages in relation to the custom crosshair. And now, as you see, it's well above it, okay? Now we are much higher above that highest diagonal line. So this is a really strong warning. And as we go to the next day, that was even a lower close right there, okay? We see that we're still well above. So this is what you want to see. If you're looking for bottoms, you want to see that 50 period moving average well above the highest diagonal. That is a really strong warning that you're running out of steam. If you are looking for tops or running out of steam to the upside, you want to see that blue 50 period moving average well below the lowest, and that's that green horizontal bar, okay? Now, as we see here, someone would say, but yeah, Steve, this, top down, went and bounced, and now it looks like it's going lower. Well, let's look and see how this last close on Friday corresponds, all right? We pick the corresponding bar, we move up, And what is the custom crosshair telling us? It's telling us that it still is reaching some type of area where it's running out of steam to the downside. So is this a recommendation to buy all the airlines, saying, well, if United Airlines is bottoming out, then we should buy everything? No, because it still could make lower lows. What we would suggest, not recommend, but only suggest, is that to place that type of tracking again. In other words, if you're thinking about buying it, buy it if it trades above the bar, the next bar, and continue to track it all the way down, okay? And place a stop, a buy stop, once you trade above. Just once again, a recommendation. Now, if anyone has any particular issues you'd like me to look at, once again, I said put them in your question and answer box and I can check them out for you. Someone is asking about RCL. Okay, I'll check that out. RCL. Okay, this looks very similar to what we just saw. Now, just let's go back in the past. Let's see this gap down here on the 12th, all right? If we had placed the custom crosshair above that, it was giving us a fairly good warning. See how far away it was from the upper diagonal? So that's a fairly good warning that we're getting close to the end. Even though it continued to go lower, this is where you want to be really careful, because look how far away we were at this point. This was on the 18th of March. Now, we had a nice bounce, but now we're getting close to these lows again. So let's see this last day on Friday, what the corresponding day looks like. And most likely, it's very similar to United Airlines. See how far the top 50-period moving average is away from the top diagonal line? That is, once again, an early warning that this may be running out of steam to the downside. So if you're thinking about shorting, or if you are short, just be very careful, because this may have an explosive rally to the upside. If you are thinking about going long, I would not in any way recommend to buy this, because we're not an advisory service. I would just say a good technique, if you're thinking about going long, would once again be to track it with every high of every bar. So if we trade above the high of this bar, then that would be your confirmation to get in. But it's entirely your choice, up to you. All right, let me see if there are some other examples here as I go back to the question and answer box. Oh, I'm sorry. So maybe you came in late, but I said I'm only looking at stocks. I don't have the data feed now for the currency pairs or the futures. Somebody's asking about symbol USO. Okay, I'll check out USO. Is that the ETF for oil, I believe, or not sure? Okay, as we see here, let's go back to this day once again on the 18th. If we look back in hindsight, do you see how this was giving us an early warning? Do you see how far above that was? Now, remember, sometimes it takes a little time for this to kick in, but wouldn't you like to have a warning a week or two in advance that something may be getting close to a bottom or close to a top? I mean, that's a great warning. I don't want to know that day. I'd like to know a week in advance just to start getting ready, start putting together some strategies, start putting together some structure so that when it does happen, I'm ready. Let's see what happened now going fast forward to the 30th. All right, last week, you see here that the custom crosshair tool, 50-period moving average is well above the diagonal line, so it's still giving us warnings. So at this point, I would probably say, okay, let's use this tool, and we buy once we trade above, and you could have gotten long and taken advantage of this. Now, as we see, if we look at this last day on Friday, it's still above. So even though we're moving up, there's still some room for this to go higher according to the indicator or according to the tool. But it's very subjective. Where you decide to enter, where you decide to exit, where you decide to place your stops, is entirely up to you. All we're doing today is sharing with you a tool that has a real strong warning if something is running out of steam or there's still momentum left in the current run. Okay, let's see. Someone's asking if I could look at the spider chart again. Okay, sure. We'll look at that again, and it looks very similar to what we've seen before. I'll punch that up. Okay, here was the bottom made on the 23rd, okay? And look how far above the custom crosshair was, or the 50-period moving average was above the custom crosshair. This is what you want to look for. When the 50-period is hugging either the top or bottom diagonal line, that's, you know, kind of a warning, but not a strong one. What you want to see is the 50-period moving average as far away from those top or bottom diagonals as possible. That's telling you that there is less strength in the market in the current direction. So as we saw right here on the 23rd, it was giving us a tremendous warning there was less strength. But not to say, if we went back here to the 16th, it was still giving us not a real strong warning, but still giving us a slight warning. You see how close now the 50 period is to the top diagonal? That's a slight warning. That's not a real strong warning, but that's a slight warning. Now let's move it to Friday. Let's see how the custom crosshair still is. Well, it's not as far away, so it's still giving us a slight warning that there still may be some room to the upside, that it still may be running out of gas to the downside. But it's a slight warning. So see, you want to see it look more, instead of like this, you want to see it look more like this, where it was fair distance away. See how far it was away there? That's what you want to see. And to the bottom as well. Someone is asking for ZROZ, okay? ZROZ. Oh, this was to the upside. Okay. All right. This is a good example because this is the opposite. Let's say you were long and this is starting to make new highs. Let's see the close right here. Okay. You place this and it's really not giving you any indication. Do you see how that bottom 50 period moving average line is not really well below the lower diagonal? So it's not really telling us much. Let's move on to the next day when it gapped up. Well, once again, this is a slight warning. It's starting to get a little below. Do you see how that's getting a little below? But not enough to really make us worry. Let's get up to the next day. Now here's the next day where it closed up again and gapped up again. Go down. And now it's a little bit more further away. And this is what you're looking for, something that's about this far away. This is where you have to start taking this serious. And then look what happened. The stock fell from roughly 190 all the way down to 145. All right, fell about 45 points in about a week. So do you see how this helped us? So when this was down at these levels, when it made new closing highs, look and see where the 50 period moving average was. It wasn't even below the lower diagonal. But once we went up to these levels, look where the 50 period moving average is. It's below. So this is the warning you want to look for, either for something running out of steam to the upside or something running out of steam to the downside, okay? Okay, we have time for one more. Someone is asking for Apple, okay? Obviously Apple, a very popular stock. And as we see here, we had a lower close on the 20th. So let's see if that gave us any type of warning. Well, it gave us a small, slight warning, not a very strong one, but it was still a slight warning. And then the next day, it closed even lower. Let's see what happened on that day. Well, a little better warning, as you can see. Still not amazing, you know, like a real strong, crying out that this is bottomed out. But still, the 50 period is above the highest diagonal. So that's a sign that to be careful if you're thinking about shorting or staying short, that you might be running out of steam to the downside. And let's just see what happened on Friday. If we're still out of gas or running there, and now it's pretty much still above, but the warning is less, so we're pretty much up in the air. This is kind of telling us that we still have some issues. Possibly we can go a little bit higher, but it's not a real strong warning. But if for anything, the momentum is dissipating to the downside in these examples, okay? All right, let's go back to the presentation because I want to share with you a great offer we're going to have for all of you. But as we take one last look at our disclaimer, remember all examples were strictly for educational purpose only. We're not an advisory company. We make no recommendations or advices for you to trade. We're just sharing education with you, okay? All right, so let's recap what we share with you. Firstly, the market is always telling you what it wants to do. You see how we just used this simple tool and how it told us whether something was running out of steam or not. All right, your only job as a trader is to listen to the market and then simply jump on board. You never want to pick a top or a bottom. We're just using this tool to help you navigate. That's all this tool is designed for. It doesn't generate signals, doesn't tell you what to buy, what to sell, when to buy or what to sell. It just gives you one more piece of the puzzle, one more bit of information to help you make your own decisions. Remember, as we said in the beginning, that's our goal, to educate you so that ultimately you don't have to rely on anyone or anything else. You will be making all of your own trading decisions. And this tool does a wonderful job at helping you decide that. Okay, so let's once again recap this crosshair technique. This is not a full-fledged strategy. There are no buy or sell signals generated. You can apply it to up and down trendy markets, and this is virtually any market. Someone asked about the dollar-yen. I'm sorry, we don't have the data here for the dollar-yen. We're only looking at stocks today, but this can easily apply to those markets as well. Now, the further away from the 50-period simple moving average, the better. This is what you're looking for. If a stock is hugging or a future or currency pair is hugging the 50-period moving average, you won't get any kind of signal because it's not going to, or you won't get any type of advice because it's not going to really generate being far above or below those highest or lowest diagonals, okay? And then lastly, results may take a few attempts. As you just saw, many times, excuse me, it showed that it was running out of steam to the upside, maybe dropped for 2 or 3 days and then went right back up higher. That's okay. It's just a great early warning tool to help you make your own decisions. One thing I'd like to suggest, it's a suggestion, have at least, if you're looking at daily bars, have at least 3 months back data when you look at a chart. In other words, if you look at a chart that only has maybe 20 days, this is not going to work too well. You need that back data of the 50-period moving average to help you make the decisions. So have at least 3 months of back data. If you look and notice the charts I had, let me just scroll back. You see, we're looking at things, the first week of April, but this went all the way back to January, December, or January, and that's how it helps you to make a good decision. If on the other hand, I was only looking at the last 10 days, it wouldn't be very helpful because it wouldn't be enough data to help you define the 50-period moving average and its relation to the custom crosshair, okay? So have that amount of data, or at least amount of bars, 20, 40, 60, or 80 bars, even if you're looking at intraday data, like say 5-minute bars, okay? All right, so ask yourself, do you think this tool can help your trading during these turbulent markets? You see how we've been stretched well below the 50-period moving average. Could it have helped you try to find out when this was running out of steam? How about if we make lower lows? Do you think it'll help you in the future? I think the answer is a resounding yes. And because of that, we have a great special offer for you today. We're going to offer you that kitchen sink today because we want to simply educate you. We're going to throw in today's trend trading boot camp. This includes a trading strategy. This is strategy number 1. Now it says stock strategy, but we have traders trading this in any market, any time frame. I trade strategy number 1 with the E-mini future, so it can be applied to anything. We're also throwing in our PTS Primo Charting Boot Camp. This is a trend series of information of edges, and this is a boot camp where you learn all the different things and ways in which to follow, trade, and track the trend. We're also throwing in these tremendous bonuses. Look what we're offering here. These are our 10 Saturday bonuses. First one is our complete entries course. Anything you ever wanted to know about entries, we're throwing that in. We're also throwing in the exit course. Anything you want to know about exits. And lastly, our stop placement course. All of the different ways in which to apply stop placement are included. Another thing we're offering is our buy-sell line scanner. This is the 50-period moving average and all the different ways to apply it. You can scan for all the entire universe of stocks to see where stocks are in relation to that 50-period moving average. You also get our top-bottom percent pattern scanner. This is another great tool I've gone into on different Saturday mornings, how this can help you define the short-term trend. You can scan for this as well. Also, bonus number 6, strategy number 1 scanner on our platform to identify the strategy setups. So you're going to get all the rules, all the ways to identify strategy number 1, and you can scan on a nightly basis for the setups for the next day. Bonus number 7, you're going to get our multi-scanner. You can scan from multiple strategies and multiple things at once. The buy-sell line, strategy number 1. All these things at once you can scan for, so you don't have to scan separately. You're going to get auto-click smart chart entries, okay? This is, and plus the exit tools. This is just one-click access to entries and to exits, and I'll show you in just a few moments how you can apply that. I'm going to throw in as well, you're going to get the add-ons for strategy 1. So if you have TradeStation, Metastock, MT4, all these other prominent platforms, you'll get the up and down arrows for strategy number 1, okay? But here's the best thing about this. You're going to get 6 months of our PTS Primo Charting Platform, okay? These are all these values here, all together we're throwing in with no cost at all, okay? Let me share with you what's included on the PTS Primo Charting Platform, because we're not going to just stop there. Obviously, you're getting the custom crosshair, the buy-sell line, the short-term pattern recognition feature. But look at this. We're also throwing in the auto-generated exit levels. This is a great, great tool. You can combine this with the custom crosshair. Let me show you what I mean here. There's an older chart in OLED. A buy signal was generated. I believe this is a strategy 1 buy signal. And prior to even exiting the trade, just click on the platform, the exit levels, and you can automatically see where these exit levels are. As you see right here, in roughly about a week, you reached either exit level. You can make your own decision which one you want to use. And these things are uncanny at getting you out at the right time, because look what happened after that. Once we achieved these exit levels, it fell out of bed. Where most traders would hold on to position that was a profit and later turns into a negative column, these exit levels can really help you. Now, combined with the custom crosshair and with our buy sell line and all our other tools and tips, you can really get on that road to consistency. All right, so let's break this down. All right, we're throwing all this in, a full-fledged strategy with all the rules, all the entries, exit stops. This is pullback method number 1. Our trading bootcamp course, this is just jam-packed with information. 6 months of free platform and all the extra bonuses we talked about, including educational correspondence with yours truly. Now, normally this would cost you close to $8,500, $8,427 to be exact. Obviously, we're not going to charge you that in any way possible. In fact, we have a tremendous discount for our Saturday viewers. We're going to save you over $8,100. We're only going to charge you $297. Now, that's such a phenomenal price for getting over 4 decades of information. This is just tremendous, along with 6 months free of the platform. If you purchase these things separately, it would cost you over $8,000, but for a limited time only, probably for the next few days, it's only going for $297. So ask yourself, a year from today, you will have wished you became a member of this course. Take advantage. Trust in yourself. If you've been struggling with your trading for less than $300, you can really start moving it in the right direction. And on top of that, you'll have educational correspondence with yours truly. Anytime you have a question, I'll be right there to answer it as soon as possible. So here's how to take advantage of this great offer. Contact Pro Trader Strategies. They have trading consultants manning the phones right now. They would be more than happy to put together this for you for $297. They'd be more than happy to answer any questions concerning the strategies or the course. I would suggest if you have questions concerning the offer, call them directly at 310-598-6677. They would be more than happy. There's absolutely no obligation. They would be more than happy to answer any question you have and take your order over the phone. Now, if you want more information, that link you see at the very bottom will take you to the sign-up page and the informational page. That has been posted as well on the chat box. So if you don't want to copy and paste that lower link on the bottom, you can just simply click on the chat box and it will take you there, okay? So please, if you have any questions, now's the time to ask me. I promise I'll answer them as best as possible. I see someone wanted me to look at VZ. Okay, I'll do that real quickly. I'll go back to the charts here. I'm sorry. There we are. Okay, let me just get rid of this. All right, you were interested in VZ. Okay. All right, there's the 50-period moving average. Remember, what we're looking for is price well above or below. Now, this isn't, in my opinion, that far below. We're only roughly about not even 10 points below. So I'm not sure you're going to get an accurate reading. As we see the lows that were made right here, let's see what the custom crosshair was telling us. Well, it was giving us a little bit of warning right there. Do you see how the lows were there on the 24th of March? That closing low, that's what you want to do. You want to see new closing lows. And I believe the next day was an even lower close. So we'll go to see the 25th, okay? Yes, that was giving you a warning right there on the 25th. The top diagonal line was below the 50-period moving average, or vice versa. The 50-period was above the top diagonal. So that was a clear-cut warning that you should be careful. It wasn't a real tremendously strong warning, but it was a warning telling you that we may be close to a bottom. If you're short, get out now. Is this telling you that it is going much higher? It's topped out? No. I mean, if we look at the custom crosshair right now, it's very neutral or below, so it's not telling us anything. Remember, what you want to see, this tool is mainly used when price is well stretched either above or below the 50-period moving average. In this case, it wasn't really that well stretched, okay? So let's go back now to the presentation. Once again, that's the information. Some people were asking about that. Other people were asking, so Steve, what if I have TradeStation? What if I have Metastock? Well, you can use, for that, you can use what we're offering in the 10 bonuses, and that is basically you can use all the information and you can apply it to the charts you see on, let's say, TradeStation or Metastock or MT4, and you'll get the up and down arrows for strategy number 1. But you won't have use of the custom crosshair because that is only found on our platform. So I would really strongly recommend that you can still get those add-ons, but the platform, the 6 months, is really where the education is going to come in. And remember, when you open up any of these things, the up and down arrows and such as that, that's so much easier. We devised it to be extremely simple on our platform. Everything is one click away. Whereas if you have, let's say, TradeStation, where you have to open up the indicators box, you have to scroll down and look through the hundreds of indicators for what yours is. You have to click it on. You have to click OK or edit. it's the process takes, when in the heat of the moment, you don't want to be doing all that. But for our platform, it's as simple as one click away. Everything is right there. So if you want to take your trading to the next level, please contact ProTrader Strategies. They have trading consultants manning the phones right now. Remember, there's absolutely no obligation. You can ask them any question you like concerning price or discounts. They would be more than happy to take care of you and to set you up right away. You can be up and running this afternoon, getting all this information, 43 years of information, and you can email me this afternoon with any questions, okay? So there's the information. Remember, contact ProTrader Strategies. You can call them directly at 310-598-6677. And as we take one last look at our disclaimer, I just want to say I hope you learned something today, how we really want to teach you. That's our only goal as educators. We want to teach you so that you can make your own trading decisions. I want you all not to be just having a good couple of weeks or a good month. I want you to be having a good decade, a couple of decades. You can be trading 20, 30, 40 years down the road. That's my goal as your mentor. So take advantage of this really discounted offer. You're saving roughly about $8,000. And I look forward to all of you becoming students of mine in this Trend Trading Bootcamp course. Thank you so much for taking time out of your Saturday morning. I'll see you next week. Bye-bye.